So I added a brand new stock to the portfolio and I plan on building out this position even further next week. Great company, great fundamentals, great valuations, and probably a company you never heard of. So I'm going to be revealing that in this video. I'm also going to give you 2 LEAPS play ideas. And then also I'm going to talk about 2 stocks that I added more of in my current portfolio. So let's go ahead and jump into it. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. As you see the portfolio right here, near all-time highs. If you do want to see me hit my 8-figure goal and follow along that journey, make sure to be subscribed by clicking the subscribe button down below. And if you get any value out of this video, please hit the thumbs up button for me. I would greatly appreciate that. So let's go ahead and jump into the realized gain loss for the day. As you can see, took a nice little profit, $411. I'll take it. Results vary month to month, day to day, but I'm very happy with that result going into the weekend, and I'm not the only one doing it. As you can see right here in my private mastermind options trading university, we have clients sharing their inspiration right here. Mike sharing his wins today. This client right here sharing their wins, and obviously these results vary based off portfolio size and risk tolerance, but we have many clients that shared their big wins today, and that was very inspirational. Now, if you do want access to my trades and my LEAPS entries and exits channels, that'll be at the top of the description down below. And also, I do give away free trade ideas on my Instagram and my free newsletter, which are both down below. Now let's go ahead and get into what happened today. So payrolls came in, the unemployment report came in a little bit worse than expected, okay? Initially, the market kind of jumped up and then sold off later into the day, but didn't sell off as much as I thought it would. If we take a look here at QQQ, again, we jumped up, kind of sold off, and then we finished pretty much where we were at yesterday. So kind of an inside day, not much, in the overall markets. But if we took a look at VIX, VIX did spike up a little bit in the morning and then kind of slowly subsided down to 15. So right now, there is a slight fear in the market, but not really that much considering that the jobs data came in pretty bad. Now, as you see right here, we're on the lower end of VIX 15 to 20, slight fear in the market. So essentially, I could have 60 to 80% allocated to positions or 20 to 40% in cash. Right now, I have about 14%. So I'm pretty aggressive because I think that we are going to be headed higher. If we take a look back at QQQ, I think that going into next week, we do have the CPI report on Thursday. So I think we'll trade kind of sideways, maybe choppy into that report. If that report comes in pretty decent, inflation is kind of on its way down, I think we could gap up, okay? Now, this did change the odds drastically for the CME FedWatch tool, which shows basically how many rate cuts we're gonna get, how big they are going to be. We're 91% chance of getting a rate cut on September 17th this month, okay? A quarter basis point. Now, the odds actually went up for a half a basis point rate cut, which is a bigger rate cut, which could also happen this month. So the rate cuts are getting more aggressive. If we don't get that half basis point rate cut, we're gonna have a quarter basis point rate cut next month, December, and then maybe even in January. So aggressive rate cuts coming on the way, not for good reasons, right? The unemployment report came in worse than expected. So it's not good for the economy, but because these rate cuts are happening, all right, that is going to stimulate the economy. That is going to enable businesses to start refinancing their debt, borrowing more money to hire more employees, do more R&D. So these are the types of things we want to see for the market going higher. Now let's go ahead and jump into the 2 stocks that I added more of today. So right now, Robinhood was a great opportunity today. It kind of dipped down into, if you're subscribed to my newsletter, I called this out yesterday in my newsletter for a LEAPS call option opportunity. If you had the opportunity to grab that here with me, that was it. So we kind of dipped down all the way down to 95 on Robinhood, hitting that entry point. So what I did was I grabbed some LEAPS call options to lever up my money for a nice bounce back. So let's go ahead and look at the portfolio and I'll show you exactly what I did. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. But if you take a look at the portfolio, okay, we're going to go down to the hood position. As you see, I bought 7 January 15th, 2027 call options. I'm already up 7% on those, about $1,700. Okay, so yeah, I went out basically 497 days. I bought the 70 Delta call option and we're already up on those. Now it's kind of too late for entry because now we're at 101. I entered when the stock was around 97 or 96, somewhere around that area. So I'll probably hold these into next week. And hopefully hood could kind of bounce back into this, 105 to 110 area, and I'll probably let go of them there. Okay, so that was the first play. Now there still is ample amount of opportunity for cash secured puts in Robinhood if you could afford, obviously, to cover those. This is what the ones I have on Robinhood. I have the 100s and the 105s. My 105s are in the money, so I might get assigned next week. Totally fine with that. But essentially, if I had to do another cash secured put, I'd probably go out to October 10th and I'd grab the, let's just say the 30 Delta. So we're going to go here, 94 strike, collect 5% ROI. Results aren't guaranteed. These vary because the stock price fluctuates, but I like that. Sell the 94 to collect 410. Now, if I sold those, okay, the risk is if the stock goes below 94 by expiration in 35 days, I will be forced to buy 100 shares. So, but I still get paid the premium, but I would have to buy 100 shares. And that's why I like selling cash secured puts, because I'm able to get the stock at a discount and get paid to do it. So I like the premiums and I like the way of doing that. So that's hood. Let's go into the next stock, which is Amazon. Amazon right now is one of the only Mag 7s that is below previous all-time highs before the tariffs crash. So I think Amazon is kind of the late runner, and I think it is going to get, tagged with buyers very soon here, just like Google did, just like Meta did, just like, even Apple. I know Apple is not at all-time highs prior to the tariff crash, but had quite a big run. So Amazon's kind of the laggard here, and that provides for some opportunity. So what I did here today was I believe I sold the 230 cash secured put, which is pretty close to where the stock's at. It's right at the money, okay? So I'm not getting much of a discount if assigned, but my goal is to get assigned and then ride the shares up, back up to previous all-time highs, 242 or higher, okay? So if we go into the portfolio, you'll see that I upped the position to 113K in cash secured puts. I have the 225s, and I sold 2 of those October 3rd 230s to pick up $910 in premium. So that was my move there on Robinhood. Now, let's get into the stock that I added to the portfolio. It's one you probably haven't heard of. It's not like a famous, CEO or famous stock of that sort, like that's always on the headlines. Definitely one that's more in the background, but is, a silent, let's just say, one of those silent stocks that outperforms. So Q2 highlights for this stock, okay? Revenue, $2.89 billion, increased 21% compared to $2.39 billion for the second quarter of 2024. So growth rates are, single to double digits, not super high growth rates, but steady, and they produce a lot of net free cash flow. So that's what I like about this company. Earnings, 9.4% compared to 5.6%. Earnings per share, 182 compared to 80 cents. So a lot of growth from last year. And then they repurchased about 0.6 million common shares. So they're always repurchasing shares, which I like that because share buybacks help investors and help the stock increase forward. So some pretty good numbers there. Non-GAAP free cash flow of 400 million. Okay, previous outlook was 350 million. So that is a big outlook for 2025 on this stock, and I really like that. A lot of growth here. So this stock that I added to the portfolio is Celestica. Okay, Celestica. Now, Celestica creates electronic components for many different companies. They create they manufacture many different things for healthcare companies that need medical devices. They'll just hire Celestica to go ahead and manufacture those products. One of their biggest clients is like Dell, Cisco, right? They manufacture data center gadgets, stuff like that. Also, like fun fact, they manufactured most of the parts for the Xbox 360 if you were an Xbox fan back in the day, okay? So, they make many parts for big companies. They're not a direct-to-consumer brand. They work with businesses. So what I like about this stock is that their PE ratio is very low, okay? 47 for a stock in the electronic, data center, all of that. They're basically kind of have a big wide array of products that they create. So they're in healthcare, military, electronics, AI, all kinds of stuff. So they work with many companies. And for a 47 PE with tons of customers, a wide range of diversification of their revenue, that makes it really good. Okay, so I like that. 47 PE. It's a $27 billion market cap company, so still on the smaller end, but I do believe this company will be a lot bigger in the future. And if you look at their revenues, the revenues have been increasing as far, and their margins as well as their net free cash flow. So what's good about this stock is it's really good for the wheel option strategy. So if you take a look at the actual stock, you'll see that it has one of the most beautiful charts I've ever seen, right? Look at this thing. It just beautiful uptrending chart. This is the type of charts that are very easy and predictable to trade, okay? So I like the company, good PE ratio, because a lot of the companies I'm trading are, in the 50s, 60s, 80s, sometimes like Palantir in the 500s PEs. So I do like to add more stable companies into the portfolio with good options premium. So the company jumped up 9% today. I don't know why exactly that happened. Potentially because of Broadcom earnings. I know they have a strategic partnership with Broadcom, but they kind of jumped up today. So if you go to the account, you'll see my current position. Okay, I have the 200 puts that I sold yesterday, and I'm up 67% of premium on those. Now, I do plan on adding more, probably a few more, and I'll probably go out to October 10th. And I'm thinking about the 25 delta, 30 delta, somewhere in that range, maybe the 215s. And that's a 3.64% ROI on those. Now, results not guaranteed because the stock may fluctuate. But I'm going to wait until Monday to kind of see where this thing opens up. If I could sell the 215s, at least it'll get me down here so that if the stock does come down by expiration, I will get, a 10% discount, 11% discount on the shares from current prices and from all-time highs, which is the potential of where it could go. That's a 16% discount. So I like this stock, very predictable, slower growth, but produces free cash flow, has a moat as far as diversification of their income because they have a lot of different customers. So that's also a good thing to see. Okay, so I really like Celestica. That's the brand new stock I added to the portfolio. Now, let's talk about the two LEAPS plays, as I think next week we are going to see potential volatility, but I do think this market's just going to grind higher, okay? NVIDIA broke that lower Bollinger Band today, hit the 164 area. This was a perfect entry today. Now, on Monday, if we could grab it down here in this area, 164 all the way up to 169, somewhere in that area, this would be a good LEAPS opportunity to just ride this thing back up to 180 or previous all-time highs, okay? So that's going to be the play there. We're almost oversold on the RSI. MACD is looking pretty bearish, so it's good to kind of be the contrarian and counterplay this stock, which is what I'm doing. So I didn't buy LEAPS, but I do have a lot of cash secured puts at the 170 strike. So that's what I'm looking for as a potential play. Also, the next one's going to be Palantir. Now, I already have the Palantir LEAPS. I got in at 161, so not the most ideal entry. But if this thing could, you could see this thing down at the 150 area again, 150 to 155, somewhere in that range where it closed at 153 today. Again, a good LEAPS opportunity, almost oversold on the RSI. The MACD is kind of curling up here, looking a little bit like it wants to make that bullish crossover soon. And then, we just have to see the overall markets kind of go up. But once this thing could really pick up, we usually see it kind of, skyrocket as you have in the past when it hits this lower Bollinger Band, tends to suck back in and then gap up. So, and it did right here, gapped up, right? And it did back here as well. So you just have to be patient with Palantir, but this is a great entry. It's showing stability here as the market fluctuates and goes down. So that's what I like. You know, Palantir, nothing fundamentally has changed about the company. So that's what I'm looking at for next week. Monday's open, just really preparing to grab some of my favorite stocks before we get this next leg up on QQQ, which again, I think this 590 area will be touched, 590, okay? And then maybe once we touch there, we kind of come back for another pullback. So that could be in store for the next few weeks. That's kind of the target I'm eyeing, but I think we're gonna have more of a grind up, melt up situation versus a gap up situation from here. So I hope you enjoyed this update. Please give it a thumbs up, and I'll see you on the next one. Take care.